is time again for the main event. I am going to call this the most exciting hour of Expo that we have here in Las Vegas at the Rio Hotel and Casino. Guys, it is absolutely my pleasure to be here today and talk about the London-New York day trading strategy. Now, many of you have been asking about this strategy throughout the Expo. Well, guys, long story short, this is my baby. We cooked it in the lab and found 3 components to trading. This is something I do on a daily basis, trade the London-New York strategy. Now, just a quick show of hands, who here has traded the London-New York day trading session with me bright and early at 5 a.m. Eastern Standard Time? All right, more power to you guys to staying up with me because I know it comes mighty early in the morning. My apologies to my fellow traders on the West Coast. That's just when the market's moving. Now, whether we know it or not, that's going to be a key component of our strategy. It's going to be that time frame. It's right smack in the middle of the title. Now, I often get some questions in regards to London, New York. The acronym is Lonnie. No, this doesn't have anything to do with Lonnie Anderson. If you're here for Burt Reynolds, you will not find him here because if I have done my job over the next 30 to 45 minutes, guys, you will understand the 3 components to my day trading strategy, and you're going to be able to go out, move on the market, assault those currency pairs, sizing them up on 1-minute and 5-minute charts. Guys, you are JIT, just in time. Take a seat anywhere. We are getting started with London, New York day trading. First off, the risk disclaimer. I've said this in all of my presentations. I will say it one last final time. This is the slide that you will see most in all of our Expo presentations. Why? Guys, trading can be risky, especially when we get down to these smaller term time frames. We can make money, we can lose money. Know your limits, guys. Never risk any funds that you can't afford to lose. So keep that in mind as you review these presentations. Certainly keep an eye out on the risk disclaimer. So let's get right to it. London, New York day trading. These are going to be the topics of discussion. First off, we're going to talk a little bit about day trading. We're going to talk about some preconceived notions that we may already have about day trading. We're going to talk about the hours, London-New York overlap, the 3 tenets for our trading plan, and then the final, the coup de grace, our actual trading plan, where we're going into the market, where we're entering, where we're exiting, where we're finally setting those stops and limits in regards to London-New York trading. Guys, I'm just warming up. Come on in, get in close. We are getting started here, taking a look at what is day trading. Now, who here thinks they have a conception of what day trading is? All right, pretty much everybody. That's what I thought. That's great. Guys, all it is, if you're not familiar, that is buying or selling an asset within the same trading day. Now, for currencies, of course, we're looking at those specific currency pairs, and one trading day is going to be from 5 p.m. Eastern Time to 5 p.m. Eastern Time. That's a 24-hour market cycle. Our objective is to open and close our positions before that 5 o'clock bell, that rollover occurs on our platform. The key here, if you take away anything from this slide, maybe you already know what day trading is, maybe you don't know that it doesn't necessarily denote high-frequency trading. Now, there was a recent study done for the Wall Street Journal. Out of all of the hundreds of thousands of millions of transactions that happen on the New York Stock Exchange, guess what the average time those positions are held? Anybody want to take a wild guess? Anybody? Yeah. 3 seconds. 3/4 of all transactions on the New York Stock Exchange are closed out in less than 3 seconds. Guess what? These are going to be supercomputers using a latency faster than the speed of light, buying and selling between different stocks. Guess what? There's those same computers in Forex. You've worked with the automated trading guys. They are going to buy and sell very rapidly. That's going to be high-frequency trading. Sure, it does fit the day trading criterion, but that doesn't mean that we have to be sitting there by the computer clicking every 3 seconds, buying and selling. If we take one transaction, preferably one really good transaction for the day, close it out within that 24-hour time span, guess what? You just found yourself day trading. So let's go ahead and eliminate high frequency, take it out of our vernacular, and move on to, hey, just being a day trader and looking for a few different trades per day. Where are we looking for these trades? It's going to be during that London-New York cycle. Now, first off, I alluded to this earlier about the 24-hour nature of the market. I put this slide in particular because I know many of you are moving from other markets. Maybe you're trading currencies in the futures market. Maybe you're trading stocks, options, or many other assets out there. I know Forex isn't the only place to trade. Dr. J trades everything without relent, so I just want to make sure that everybody realizes that, hey, Forex offers us 24-hour-a-day trading. For me, this is my bread and butter. We can trade it at any time. We can log in, regardless of our preference, and place a trade during these hours from 5 p.m. to 5 p.m. If you want to find out when the open and market close is, guys, I just remind you, use the tools already at our disposal. Go into Market Scope 2.0, pull up a daily chart, and when that daily candle closes, guess what? You've just found yourself inside of a new trading day. So is everybody already familiar now with the concept of day trading and our market hours? All right, looks like I'm getting a lot of nods. That's good. Everybody wants to move to what are the best hours to trade? I think I've gotten this question 3 or 4 times already today. I'd be glad to reiterate this, that we are looking for the London-New York overlap. Guys, it's implied directly in the name, London and New York day trading. This is the hours that we are abiding by. 5 a.m. Eastern Standard Time till 11 o'clock Eastern Standard Time. What's great is this happens to coincide with the time that I am up and awake and trading at FXCM and presenting inside of Dailyfx Plus. Now, I've heard some of you say, hey, that's way too early. That's all right. Trade the latter half. You'll see that 11 a.m. Eastern Standard Time still allows us a bit of time to catch that volatility and the moves in the market. Now, who was here earlier when we were talking about volatility with our euro and pound crosses? Absolutely, about a third of you. Welcome back. This is something that we are looking for in day trading as well. We are looking for strong volatility. Why? It's going to give us multiple opportunities to enter into the market. As well, hey, if we pick a trending pair, this is going to make our market decision very easy. We'll discuss that in a moment, but we should be looking to sell in downtrends and buy in an uptrend. Now, here we have the trade sessions indicator. Not quite sure I have a red line on that graph, but the key here is going to be the indicator itself, looking at the different blocks. It's going to show us where the market is going to open and close around the world. The key being, the blocks that we see in blue is going to be the Tokyo session, along with the Sydney overlap in Australia. We're looking for the green and the red overlap. That is going to be the London session in green, and our red session is going to be the New York Open. Guys, where these 2 points on the graph meet are where we're going to see considered the greatest amount of volatility. Now, here we have a chart where we can see that our first blue bar, we can see a consolidating period during Asian session. Again, we can see increased trend action based off of that movement later in the day. We see London traders come online, start moving prices in a direction of momentum that's already been established. We're looking to take that large swing and push it towards our limit if at all possible. Now, I put this up as well. We can see that there can be large bars in regards to Japanese yen. This actually was a spike after some of the statements that we heard about the Bank of Japan about defending their currency. Not saying that these moves do not happen in other markets. However, in my trading strategy, we're looking for the highest probability of finding that volatility and momentum. For me, that's found on that London-New York overlap. And if you're unfamiliar with those time zones, go ahead and pull up the trade sessions indicator. It is a custom indicator inside of Market Scope 2.0. Guys, if you want to download that from fxcodebase.com, feel free to go out, talk with some of the professionals out there on the trading platform. They are absolute experts, and they would be happy to show you how to load those. As well, I have a personalized template which will show you how to add this to your chart. So at the conclusion of this presentation, feel free to come and get a business card from myself. I would be happy to show you how to put the trade sessions indicator on the graph myself. Now, once we've got the trading hours down, here comes the blueprint. Guys, this is where the stencil meets the paper, not necessarily the rubber hitting the road. This is going to be the plan of action. These are the points that we are going to abide by when we're trading on our smaller term charts, and that's finding the trend. Who here has gone through a trend trading example sometime in the last 3 days? Awesome. Everybody. Who here's a range trader? Great. Okay, sort of. 2 guys. Well, you're not going to find a range trading strategy today. This will give you an alternative during the times when we see market volatility increase and strong trending markets. So we are going to look through our 56 different currency pairs and size them up for the strongest trends. Next, we're going to find support and resistance. Guys, these are just natural barriers of price, want to lay. We're going to use an indicator to trade in between those levels. That indicator is going to be our execution model, which is CCI. We're going to go in full detail, starting off with tenet number 1. This is the first tenet out of 3 in regards to day trading. Guys, here we can see finding the trend is quite easy. Who here would say that this is the downtrend? Raise your hand. Great. I ought to see every hand up in the room, and if not, hey, come catch me after. I'd be glad to show you that this price is heading downwards. We are seeing that we are making lower lows on the graph, and this is an example I used earlier. The Euro-Aussie, one of my favorite currency pairs to trade, because this is an exact ideal image of what a downtrend should look like. Yes. Yes, this example is going to be a daily. We're going to move in and actually talk about price and momentum on 30, but I want to go ahead and get an overall bearing on the trend and just show you how we are going to use that price momentum in our direction. Now, I'm going to zoom into some smaller term charts, and that's going to be the 30-minute for finding the trend. I put this up just to show an extreme example of what a downtrend is, and I think the Euro-Aussie speaks for itself in that nature. Now, in regards to understanding the trend, guys, it's all about momentum. Certain pairs will trend stronger than others. Some will be weaker and take longer to develop. Just like the euro-dollar here, we've had some conversation, people saying, is a new trend developing? If we have to ask that question, well, it's probably not trending yet. If we can look at the chart and size up from the back of the room, you guys back there could clearly see that, hey, the Euro-Aussie is heading lower. That's what I want. I want a chart that's going to be easy to trade, where I can, in a heartbeat, just snap my fingers and know I should be selling. Guys, just to reiterate, making sure that we have a clear understanding that we are going to buy in an uptrend and sell in a downtrend. Now, avoiding ranges at all costs, guys, again, this is going to be a trending-based strategy. No ranges here. If you are finding yourself trading in a trend, please use the appropriate strategy. This may not be the right strategy for that occasion. We're at the 4:15 mark, just about a quarter of our presentation. I want to go ahead and move on to our next point. All right, there we go. We are going to walk down the chart. This is the most leisurely part of my day. Why? Who doesn't like a stroll in the park? I don't get outside much. I'm sitting behind a computer screen looking at Forex pairs. So instead of going outside, hey, I take my time and I stroll down the chart. I am walking up this graph, taking a look at the dollar CAD, mind you, all the way from the lowest low. We're looking to locate higher highs on this graph. That's going to indicate an uptrend, or lower lows in a downtrend. Now, here is exactly where the blueprint comes into action for London, New York. We are sizing this up on a 30-minute chart. This 30-minute graph is going to be the basis for all of our trading. This is where we find the trend. This is where we want to find higher highs. And here we go. The dollar CAD showing a nice example. We can see that it's even broke up further on Friday's trading. Just to my chagrin, we saw it break out, go higher to 99.60, an attacking parity at the present. So when I say find higher highs, everybody familiar with that? Excellent. Because there's going to be a test at the end of this, and if we can't find the trend, again, we're going to have to repeat the expo and do it all over. Here's a scenario where we don't trade. If there is no trend present, guys, get out of there. This is the euro-dollar graph that I keep referring to, when people ask, well, the euro dollar may be going lower, it may be going higher, take a look at this price action. Where is it heading? Well, we have a higher high, we have a lower low, we have a lower high, we have another higher high. It's very ambiguous. Looking at this chart, you may have found yourself in a range. Now, finding that trend is only going to be the first component out of 3. Once we've honed in on those specific charts, then we can move into support and resistance and CCI to finally pull that trigger, looking for pullbacks against that direction. So euro dollar, everybody clear why we are not looking at this particular pair at present? Yes, sir. This is a 30-minute chart for the euro dollar. And again, we can see it back for about the last month of trading, and it has been moving sideways. It just broke out recently a little bit to the downside, but I'll tell you how we can qualify to start to see if we have a new trend developing. Here we go. Before we move there, just one last progression. Guys, uptrend or downtrend? Uptrend. All right, we got it. We're just going to skip that slide. You are pros making my life easy. That means we get to spend more time on the blocking mechanism. This is where we determine whether those higher highs or lows are occurring in a specific time frame. First, we're going to pull up our charting preference, Market Scope 2.0, and we're going to look at a minimum of 2 3-day periods. Now, I divide our trading days into blocks. You see that trading is going to happen from Sunday at 5:15 all the way to 4 o'clock on Friday. I'm going to divide that into increments on Sundays and Wednesdays, showing 3 days worth of trading. Guess what? We are going to find that we're looking at 6 days worth of data. So 30-minute chart, 6 days worth of data, that's all we need. Anything more than that is really going to give us a little bit of analysis paralysis in regards to the trend. This blocking method is going to allow us to see that visually to ensure that our trend lines are within the fines of the block. If you're confused, don't worry. We have a graphical representation here to really demystify the blocking method. Here we can see the same chart where we are making higher highs going up the screen. And again, we're finding ourselves in an uptrend here. However, how do we know? We want to go ahead and block off Sunday using the orange markers on top of Market Scope 2.0. You can see the triangles there. There's no magic to it. Just use your vertical line tool and draw it straight down the graph. Count out 3 days to Wednesday. Draw another one. That's going to be your first block. Do that again for the next Sunday. You now have 6 trading days worth of data behind present price action. We should be making higher highs in an uptrend during all of these periods if we are going to be trading. If that doesn't qualify, guess what? We're not in a trending market. We're not going to trade. You're absolutely right. Why would we settle for a second best currency pair when we have something that is really gaining momentum, really gaining strength and pushing price towards our ultimate goal? So that blocking method, just a great way to clarify that trend. And I've worked with traders using this method, and this came about from client feedback. How far back do I go in relationship to current price? And some people were looking at 2 or 3 months of data. Some people were looking at 6 months of data. What has happened over last week may not be influenced by what happened last August or last September. This is going to allow us to zoom in with a magnifying glass on this week's worth of trading, looking at those last 6 periods. Those 2 3-day blocks really give us an opinion of where the market is going to be heading. Here we can see in each different point, we had a higher high. We also had a lower low. This is exactly what we're looking at. That means current price action is going to allow us to implement buying opportunities to make higher highs directly on the graph. So the basis is going to be the 30-minute. You won't find a 2-hour, you won't find an 8-hour or a daily chart inside of this presentation in regards to our 3 tenets. Tenet number 1, going to be finding the trend. It all begins on this 30-minute graph, and we size that up by making higher highs in an uptrend, lower lows in a downtrend for at least the last 6 trading days. I want to keep things as simple as possible. Guys, drawing on Sundays, drawing on Wednesdays, I don't have to sit there and count or aggregate days moving forward or back. This allows me to chunk our trading week into equal parts every single time. I just pull up my handy calculator, or calendar, excuse me, and put those vertical bars on Sunday and Wednesday. So it was simply for ease of use, and that's just me being a lazy trader, nothing more. Great question. All right, we are trucking down to tenet number 2. Once we found the trend, we've blocked it off, we are going to use support and resistance. Now, I alluded to this before, the 200 moving average. I use it, and you should too, because everybody is looking at the 200 moving average. Now, guys, who here has heard Jamie Setley refer to the 200 moving average? Who here has heard John Kicklighter refer to the 200 moving average? Who here has heard Richard Crevo referring to the 200 moving average? We're starting to get a pattern here. All of the analysts and all the EDU instructors understand this importance. Again, this is going to be something that I want you to take away from the expo. Regardless if you use the strategy or not, use this 200 moving average as a line of support and resistance. Guys, why is it important? It is used in all markets. I've said this once, I will say it twice, regardless if we are trading Forex, regardless if we are trading stocks, bonds, commodities, futures, you name it, the 200 moving average is going to come into play. Guys, big hedge funds are using it. Banks are using it. We're using it, and we are going to use that line in the sand to find resistance as long as price is trading above. Guys, likewise, we can see that, hey, support is going to be found below present price. Guess what? If we are trading upwards and support isn't found below price, we've got a problem. That means our trend is heading in the opposite direction, and we may be seeing a trend reversal. Again, I'm going to show some examples of that. Give us a visual representation there on the graph so you can clearly see why that support should be found below current price in an uptrend. Resistance should be found above current price. All right, so let's go ahead and move on and take a look at the charts. Guys, here we go. This is what we are looking for. Still on our 30-minute chart, applying that 200 moving average. Guys, it's going to be a filter for our price action. Putting this all together, we can see that we are making higher highs up the chart. Tenet number 1 has been met. We're making an uptrend being established. Next, putting up that 200, it's going to show us that this is going to be a valid trend. It is our confirmation. Why? 200 SMA working as support. Price trading above. This is going to indicate that our trend is going to be in play and allow us at this juncture to move in to our smaller time frames. Likewise, in a downtrend, price should only be below the 200 SMA. If any of this is invalidated, let's say that this graph had dropped below 130. Guess what? We wouldn't be in an uptrend anymore. Yes, 6 days worth of price action would have been showing us higher highs, but at present we would have been dropped below the 200 SMA. That would have invalidated our trade for that particular pair. It's worth our time to move on at that juncture and start sizing up other opportunities in the market. Now, guys, here now we have met tenet number 1, finding the trend. Tenet number 2, the 200 SMA, support and resistance. We can start moving down to our lower term charts. This is going to be the 1 and the 5. Now, guys, tenet number 2 has to apply to our 1 and 5 minute charts. If it doesn't, hey, we're not going to trade that pair either. If tenet is violated on the 30-minute, we're going to look for a new pair to trade. If it's violated on our 1 minute, guess what? We're going to look for a new pair to trade. This is going to be a recurring theme that out of those 56 different currency pairs, we are narrowing down the playing field to the strongest trending markets. Now, some guys like Richard Crevo, they walk in the office and they do a strong, weak analysis. This is how I personally filter my trades. We're essentially doing the same thing, but going about it in a different manner. Me just filtering it out one step at a time. Is there a trend? Yes. Is support and resistance being validated? If yes, hey, move down to smaller term time frames. If so, check our 200 moving average on our smaller term time frames. If it is, we can then proceed with our strategy. Here we are going to have a downtrend. We can see price moving below, and this really solidifies how, in a downtrend, price can be a little bit difficult to read? Well, the 200 SMA going to work as a filter. As long as that line is going to work as resistance, we are going to continue to look for sell trades. Here we can see a test of once, twice, 3 times, all failing. As long as this is going to be our market preference to sell, as long as price remains under that 200 SMA, hey, sky's the limit. We can continue to sell and start looking for our CCI crossovers in regards to execution. So the key is to use this as a filter. If price was to be above, guess what? We would no longer want to be selling. Let's go ahead and take that currency pair off of our radar and move on to a new chart. Now, this is why we're taking such an excruciating step of going tenant by tenant to find the strongest trending pairs. We're going to weed out all of the ranging pairs by doing this analysis. We are going to only find out of 56 pairs, normally maybe 3, maybe 4 pairs that meet the criterion for the day. Sometimes you'll have more, some days you'll have less, but you only want the strong market movers. You want the one that are really driving home during that London-New York overlap, pushing price towards our limit. So this filter, it's going to take out a lot of guesswork in regards to range versus trend. Our filters handle that for us and give us the highest chance of success in regards to momentum. We're looking for the trend on the 30-minute chart. We're looking for confirmation with that 200 moving average, support and resistance, tenet number 2. If and only then, if tenet number 1, tenet number 2 have been abided by, then we're going to drop down to the smaller term charts and then start to look for our trading signals. If all the stars align, guys, this is where we get our action. It is going to be tenet number 3. The moment we have all been waiting for the last half hour, it is our technical trigger. It is CCI. Guys, who here is using CCI in their trading? All right, just about a third of you. That is exciting. CCI going to be the commodity channel index. This is going to be my weapon of choice. This is going to be my oscillator of preference, my deserted island indicator. Now, if you could choose one indicator, no, really, seriously, think about this, guys. If you had your laptop and had to choose one oscillator, what would it be? Some of you would say MACD, some of you would say RSI. I would say CCI, hands down. Now, CCI is going to work a lot like some of these other oscillators. And just another show of hands, who here is trading RSI? Okay, great. A few more than using CCI at present. Well, guess what? It is showing us the same overbought and oversold levels. It's just going to be interpreted slightly different. Whereas we see that RSI is going to have those 70 and 30 levels, CCI is going to have plus 100 and minus 100 out there on the graph for overbought and oversold. Now there's the calculation. I added this in because somebody yesterday asked me how stochastics was calculated, and I was absolutely at a loss. Guys, if you're a mathematician, here you go, out in black and white. We are looking at typical price compared to a moving average with a standard deviation of 0.15. Yeah, sky's the limit on that. The key here is that we are looking at a 20-period setting on CCI. If we are going to pull that up on our chart, the default is actually going to be a CCI of 14. Go ahead on Market Scope 2.0, add that parameter to 20. What does that do? It's going to slow down our indicator. It's going to give us a little bit of extra time between our buy and sell signals. As well, it's going to clear up a lot of the oscillations. I always like to compare this to fast and slow stochastics. Who's using stochastics here in the room? Then you know exactly what I'm talking about. Fast stochastics working fast and furious. Sometimes it's hard to interpret the data on the screen. Slow stochastics giving us less signals, but a lot easier to read those overbought and oversold levels. That's what we're doing with CCI. CCI by nature is going to be showing us overbought and oversold levels a little bit faster than its other brethren oscillators. So we need to just slow it down a little bit, put in that 20 period, and start looking for our overbought and oversold crossovers. Here we have it. We are only selling in a downtrend. So what are we looking for? We're going to go ahead, see the oscillator move back up to over plus 100. This is going to signal that the indicator has been overbought. Once we find overbought levels, the execution is coming when CCI crosses back down below. Again, this is going to come down to the candle confirmation point that we spoke about earlier. we must have a candle close below positive 100. That will confirm that price is moving down. CCI will follow and break that overbought level and showing price moving back down towards lower lows. It's exactly what we're looking for in a downtrend, looking for that price to continue that movement. Now, everybody familiar with overbought? Absolutely. Great. We'll go ahead and talk about our oversold value, guys. Who's sort of buying on dips? Buying on dips, this is exactly what we're looking to do in an uptrend. Price making higher highs. CCI is going to show us that dip. This is going to be that springboard mechanism that we talk about so often, looking for price to make higher highs. This is going to, again, look for that negative 100 level, that oversold bias, and we execute only when we see the indicator cross back above and close above negative 100. This shows us, hey, that our temporary reversal is coming to an end. We've gone ahead and hit that springboard. We are bouncing higher and looking for an increase in price from that point in time. All right, overbought and oversold. Let's go ahead and take a look at our example here. We have our dollar CAD moving up the chart. This is the screen that we saw making higher highs earlier on our 30-minute chart. We can see that tenet number 1 absolutely going to be in place there. Tenet number 2, support and resistance. On that chart, we saw the 200 SMA was acting as support on our 30. Guess what? Here we go. We drop down to our 1-minute chart. Does tenet number 2 apply? Guys, yes or no? Raise your hands. If it's a yes, give me a thumbs up or a high five. All right. Yes, it does apply. This means that we get to go ahead and look for our CCI triggers. And I've gone ahead and taken the liberty of highlighting these on the graph. And we are looking for these oversold variables. And we talked about how long CCI can stay above or below certain periods. Well, looking at this time frame, we are getting a technical trigger approximately every 30 to 45 minutes. Now, this is something that excites me. Guys, you may not have the luxury to sit in front of a computer like me and stare at charts all the time. Now, if you find yourself in a time crunch, if you find the strongest trending pairs, generally about every 30 minutes you'll be able to find a technical trigger to either buy or sell on that particular currency pair. So if time is going to be of the essence, pulling it down to a 1-minute chart, looking for these crossovers is going to be a great way to execute. Again, just matching up those crossovers on the chart, we're looking for continued higher highs all the way up the graph. Now, I get this question, how long will you trade this? I'll trade it until the trend ends. Generally speaking, I am looking for 3 1-minute trades per day. And that's regardless of currency pair. If I can trade them all on the same pair, that is excellent. But generally speaking, I'm only looking for about 3 trades a day. And here's an example of, you could have started trading with me bright and early at 4 a.m. Central Standard Time. This is all the way up till 8 o'clock in the morning. That is going to be Central Standard Time as well. So we have nearly 4 hours of uptrend to take advantage of. So great for time constraints, great for people that just want to wake up, find that trend, and hop on that CCI. Now, here is the plan of action, guys. This is our CCI blueprint, and our friend in the back will be happy because this will explain exactly where we are going to be taking profit and loss. First, just going over the rules. First, find the trend on the 30-minute chart. Once we have that, 200 SMA for support and resistance. Last, if the conditions are met, move into your 1-minute chart. Tenet number 2 has to apply. The 200 SMA, a check. Finally, we can move to CCI for our technical trigger. Only sell in a downtrend. I'll reiterate that one last time, guys. Only sell when that price is going to go to that overbought level, over plus 100, and turns back down. Use the candle confirmation. Be patient. Wait for that signal. Again, we have a wide variety of trading opportunities. We're a little late to the party. No big deal. Just throw away the signal. There's going to be another one occurring in about 30 to 45 minutes. Last but not least, buy one lot in an uptrend. Guys, this is going to use that negative oversold value in regards to CCI. Price moves down, goes oversold. That's our springboard. We are jumping into the pool looking for that higher high on price. So everybody with me in regards to the setup for our entry signal on 1 minute charts? Everybody with me? Absolutely. Good, good. Risk management, stops and limits. Wow, where do we know where to put our stops? Guys, we are using a one-to-one risk-reward strategy. Now this may be outside of the norm of some of you that are trading longer-term charts and looking for a 1-to-2 or greater on this particular pair. Now, the key here is going to be one-to-one management. Why? Because we get several trades per day. You'll see that we're using that trend to push it in our advantage. Well, if it doesn't work out, I want to get out as quickly as possible. However, trading on a smaller time frame, such as a 1 minute chart, you'll see that our daily ranges are going to be smaller. While as ATR on the euro dollar is going to be just at about 150 pips on average per day, we're only looking for a small percentage of that. We're only looking for approximately 10 pips on most pairs, and we're looking for that to occur as quickly as possible. So we're taking advantage of those small moves. That's why we're moving in our risk parameters to either see momentum head our way very quickly, or if it fades against us, guess what? Our trend is probably invalidated. We're stopped out, and we need to move on to a new chart. Now, cash is king. Risking 1% of your account, guys, leverage is going to be a double-edged sword. You've heard this time and time again. In my personal trading, I only risk 1% per trade. Now, I said that we're looking for about 3% on our account if we hit all 3 trades. If we go 3-0, 3 winners, hey, success. We can pat ourselves on the back. If you're trading and go over 3 at the same time, you've lost 3%. It's not going to be the end of the world in regards to the life of your trading account. Just to give a numeric example, if you're trading a $10,000 account, if you lose 3%, you're out $300. If you go 3-0, you're up $300. Odds are you're probably going to find yourself somewhere in the middle, getting about 1 to 2% a day to the positive or negative. What does this do? This keeps us in the game to find the strongest trends. I don't want you to go out and get blown out by one trade and not be able to see the overall trend and momentum come to fruition. So if we can go ahead and look at this last point, do not deviate. And guys, stick with that plan, stick with those risk parameters, because that's going to keep us alive and allow us to trade directly with the trend. Guys, we do have a 5-minute strategy available. I'm going to run over this very quick, but before we do this, everybody take down my email address. It is going to be England like the country, ENGLAND, and that's at fxcm.com. Guys, I have what is called the London-New York blueprint. Unfortunately, they've only given me an hour today for this presentation. We have a 5-minute strategy as well that incorporates a trailing stop. Go ahead and give me a shout out by email. Ask for the blueprint. It will detail the 5-minute strategy as well and go into the buy and sell signals, support and resistance, and the trend, but talk about our trigger. We're buying 2 lots and selling 2 lots, which is a bit different. Okay, let me go ahead and cover this very quickly. The 2-lot strategy, guys, this is going to be a signal where we buy 2 lots, just like our 1-minute strategy. However, we're going to put in 2 orders. The first one is going to use a one-to-one risk management. The second one is going to utilize a trail on the graph. Now, that trailing stop is going to lock in profit as the trade moves in our favor. Now, I really apologize. I'm going to have to breeze through this. I know you have other presentations to go to, but the key here, lot number 1, employ a one-to-one risk management, just like our 1 minute. Lot number 2 is going to use a fixed trail with no limit. So if we set a stop of 50 pips, guess what? We're going to have a fixed trail of 50 pips of profit. If lot number 1 goes our way, if that limits out, great, we've taken 50 pips off of the table. Success, right? Well, the key is lot number 2 is now moved into break-even strategy, or break-even territory. That stop has been bumped up with that fixed percentage, and now the sky's the limit. We can let that trail run and continue on with the trend. If we look at some of our strong trending cross pairs, these trends can last days. They can last months. I'm not going to sell that second lot short. We are going to let it trail forward until it closes. open limit trading on that one. Now, here we go. Just a long story short in regards to what we just referred to. Lot number 2, that's going to break even after lot number 1 limits. That is going to be the key takeaway from this slide. If you have anything in regards to the fixed trail, equal distance from the stop, allow that to work for you and lock in profit as it goes along. Now, in regards to the 5-minute, again, I really sincerely apologize for the brief overview. Please email me for that PDF. This is going to be a strategy that I trade live every single Wednesday and Friday on Dailyfx Plus. Guys, it has been absolutely my pleasure putting it all together. Find the trend. Tenet number 1. Tenet number 2, support and resistance, that 200 SMA. Last but not least, execute with that CCI. Look for those pullbacks. Go ahead and sell in downtrends, buy in uptrends, and stick with the plan with proper risk management. With these keys, you too can use the Lonnie New York day trading strategy, and it has been my pleasure to present here at the Expo. I'm going to cut the mic and they'll cut the video. I will remain here. I have nothing else to do for the next 4 hours but answer your questions. So come attack. I'll ask anything and everything in regards to this presentation. It's been my pleasure, and I look forward to working with you soon. Thanks, guys.